All right, everybody. We're just going to go over our best trade of the week as we do our post-week trading analysis. So I just want you guys to go through and just look at the factors that were present that got me into this trade. Starting off with the relative strength calculation. Here we're looking at the Kiwi Japanese yen currency pair. On the relative strength calculation at the time, the yen had a 35, the Kiwi had a 34. So if we were looking at the scales, right, if we had both of these currency pairs sitting on a teeter-totter or a scale, we would have the Kiwi at a 34, and we have the yen over here at a 35, which would tip that scale towards the Japanese yen as far as strength goes. So we would expect the weaker side to be bearish and the heavier side to be bullish. Now, I understand the teeter-totter and weight would cause the heavy side to go down, but understand we're talking about strength of currencies here. So what I like to say, my analogy is we take the 1995 Chicago Bulls and we put them up against the 2026 Chicago Bulls, and I'm pretty sure 95 Bulls are going to do a whole lot better. So because they have a much more stacked team. Things are in their favor more. We're just gonna go with the team that has the higher relative strength. So at this point, we had just walking through the logic here, about 7:45, the Japanese yen had their monetary policy statement. That's the volatile macroeconomic event that usually gets me into the market. At this point, we noticed a few other things. I just wanted you guys to see that I really did take these trades in my interactive brokers account. You can see where I sold in or where the sales got triggered into and where we got triggered out of this. This was a 2-to-1 um, take profit on this one. It worked out beautifully. I used a buy stop or sell stop limit in this case for these trades, and they worked out just fine. So, and we'll go check the VSA logic behind this too. But I just want you guys to see, without any volume spread analysis, without anything else, the edge with relative strength alone is what got me into this trade. It worked out very well. I got in for the meat and potatoes of the move. Granted, I could have got a 3-to-1 on this, but it closed at 1 in the morning. So I definitely was not awake to kind of manage the trade. If I was up to actively manage this trade, once we got to closer to that 2-to-1 level, I would then really at the 1-to-1, I'm placing my stops at break even. At 2-to-1, I'm moving my target into a 1-1 in profit. And then I'm moving my target down to 3. And at that point, once we broke down below 2 and started to make our way down to 3, it's more likely than not gonna take profit at 3, and I'm gonna allow it to do so at this point. And you could really trail based on the 50 EMA once the 50 EMA breaks. So you're gonna get about that 2-to-1 regardless, or you'll get the full 3-to-1 in that regard. But in this case, I wasn't awake to do that. So that's how that happened. So we did we'll look at this trade from a different perspective from FXCM, where they do allow volume to be shown. So I want you guys to really look at this because this is what I'm looking at from a volume spread analyst perspective. I also use the commitment of traders data to analyze these charts from the week of February 17th, 2026 to March 10th, which was the week before this FOMC, or not FOMC, the Kiwi and the Japanese yen monetary policy statements. We can see that the Japanese yen had increased its long net positioning by at least 80,000 units and had decreased their net short positions by over half of those 315,162 positions, leading to a positive net positioning. So this is what we call flipping. They flip the script. So from the Japanese yen perspective, commercial entities are long the Japanese yen, and you can see this in the positioning. So we would expect that on top of the relative strength being stronger, which in part is due to me seeing this. This is a part of the relative strength calculation. This five that this got opposed to this three also adds greater greater weight on the relative strength calculation. So it's the relative strength calculation is both fundamental and technical aspects of the market, which is why it's one of my strongest edges to be utilized by itself in some cases. In this case, like we said, around this time, 740 is whenever I set this position up. You could see it here. We use the high side of the automatic reaction because we could see they were doing something, right? You could tell that in the Kiwi market, they were both buyers and sellers as they increased their net positioning on both short and long positions, which means they're buying and selling into this move, creating this automatic reaction point, which we know is a stopping action, which we could see back here in my effort versus result calculations. They had been trying to stop the trend or slow this upward progress for a while, right? Especially from here. So this is where they're both sellers, they're both buyers, and we can really see that as that moves and propagates out throughout the market because we're getting the info from, I can move this over to the 1 hour so you guys can see the info that I'm the info that I'm picking this from is here. This Tuesday is the 17th of March, and then you have to wait until the Friday before. So it's really this information from the 10th and the information from about a month prior to that. So with all of that uh info, that's how we kind of created that narrative. So that's best trade of the week, that 2-to-1. It's structured the pullback. If you want to pull a fib on that, close the close. You can see it was right at a 61.8. We got the rejections all at that 61.8 level. And yeah, it's a rocket straight down to the lows. So little things like that. If you guys want to take trades like this, and because there was more than just one trade like this that could have been taken in the same way. This ended up being an 8-to-1 when you pull that on the Swiss. Um, Other trades similar, CAD yen, we actually got into this one as well. CAD yen, again, making a nice structured move with this upward sloping trend channel that I just want you guys to notice as this trend channel is moving in this upward angle, right? Most people would say, oh, this is bullish because it's making higher highs and higher lows, right? At this point, it makes a lower high and a higher low, and then another lower high and equal lows. So as you can see, prices are starting to push away from these highs. They're no longer attempting to break these highs. The last attempt here on this upthrust action and this last point of supply ends up showing up with exactly what we want to see right after that increase in volatility, increase in spread, matching volume, matching spread, breaking the lows with effort, right? So that's how we knew that that trade was going to be a good trade. But again, these trades close at around 1 a.m. I'm not there to watch these. These are all being passively managed. So that's why they stopped at 2-to-1. If I was here to actively manage a trade like this, like I said before, once we get to 1-to-1, we're moving stops to break even. Once we start shifting into that 2-to-1 territory, we shift our stops to 3-to-1. Then we let them break the two. They pull back and create any levels of resistance. We can continue to move down. And through those levels, as we make our way down from 2 to 3, we shift down to 5. We'll use the 50 EMA as we get close to breaking these lower levels here. If it starts to create structure, like it did in this triangular formation, then we could start using that structure as points to where we can lower our trailing stop, right? Things like that. And then as they continue to break lower and lower and lower, we just continue to move that trail with regard to the 50 EMA here on the 5 minute. If we're on the 1 hour, which is the time frame I like to trail on, we're gonna wait till we get the break of the 50 on the 1 hour. But even with that, it's moving for so many hours, 1, 2, 3, 4, 5, 6, 7, like 8 hours. We could be down on the lower time frames, making sure that we're squeezing all the pips that we can out of that trade. But knowing that we're in a monetary policy cycle, you may want to increase your take profits for volatility's sake. But the 2-to-1 is always going to hit. You could always get back in if you're awake to see that. So little things like that. But that's my top trades of the week. That's how we did those. That's how we got into those. They weren't too crazy. We got these journaled and yeah, looking forward to next week.